I've been trading for the past 6 years, and even though I'm making good money now, at the start of my journey, it was very tough and it was long-winded. It got to a point where I almost gave up when I went to university. When I dropped out, I didn't know what to do, and I went right back into trading, and I finally made it work. And during that process of my 6 years of trading, I have gathered 6 rules from what I have learned throughout the years, and I'm going to break it down for you so that you don't have to make the same mistakes I made. Hey guys, I'm literally editing the video right now, but I just wanted to quickly ask you guys if you could just subscribe to me. If I have put a little bit of impact into your life, or if I've helped you in any type of way or changed something about you to become a better person or become a better trader, please subscribe. I think we only have like 88% of you have not subscribed to the channel, so it would be great help to me, and also it will let me know that the videos that I'm making is actually helping you guys. So please subscribe and enjoy this video. So the first rule is actually kind of cliche, however, you need to journal everything. In my last video I broke down exactly how you should be journaling, but there's 2 types of journaling. There are emotional based journaling and data driven journals. Those 2 journals is what you need to do in order to actually become a better trader. A lot of people will join my FX book or they'll use Notion and they have everything automated. With this kind of craft, you cannot automate your journaling process. Instead, what you need to do is you need to ask yourself certain questions, certain criteria that you need to have to track the data that you are making from the markets, that the markets is giving you, and then from that data you can then improve as a trader. The second rule that was kind of difficult for me to understand at the start, but eventually I actually understood how to do it properly, and this is backtesting. Backtesting is something that so many traders do, but they're doing it incorrectly. The best way to backtest is to test your system. When you're backtesting, you're not testing your emotions, you're not testing your capability of trading, you're actually testing your system, which many traders do not understand. So when they are trading and they are testing their system, they are also putting in their emotion involved. Am I going to place this trade in real life? Am I going to do this? And when you ask yourself those questions while backtesting, you're actually jeopardizing those results. Instead, what you want to do is have a set of rules that you're having. Like for example, for me, liquidity sweeps, break structure, fair value gaps. As soon as I see those criteria get hit, I am then going to place my trade. But if I don't see that, I am not going to place a trade. I don't care what time the trade is. I don't care what's going on in the markets, if it's news events or whatever it is. When I'm backtesting, I am just trying to gather as much data as possible to figure out if my system is actually profitable and could I actually make money off the system. The third rule is trade small at the start. So many traders actually fall for this trap of trying to scale up as fast as possible. Because we have prop firms now, it's like a thing where starting off with $100 doesn't even exist anymore. But what we need to understand is we gotta start off small. We gotta understand the system. We can't be chasing money, because then we'll have something called shiny object syndrome, which basically means that every time you place a trade, you're not gonna be grateful for what the market is giving you. And because of that, you end up either being greedy or trying to get more from the markets, and instead you actually lose money in the markets. So what you want to do is start off small. I say this to every single trader, all my students that I have, I always tell them start off small. Let's actually see if your system actually works in real life. Let's gather the data, and then from there we can see how much you should be investing into the market. Again, this is just a bonus tip. When you start off small, you can start off with $1,000, $2,000, even $5,000 if you can. Go higher, maybe even $10,000. Don't start off too high though. And what you can do is you can actually invest into your account. Investing monthly is way better than just putting money in and letting that sit for 6 months to a year or however long, or just blowing that account. Instead, if you invest every single month, number one, that account will never be on zero ever again. But number two is you will always see a benefit of yourself trading, and you won't be giving up because you have an investment going into this. You're investing in yourself, you're investing in your craft, and so you have a reason to keep going and keep pushing. Rule number 4 is actually trade with prop firms. Now, I know I said on my last rule that you shouldn't really be trading large amounts, but once you have understood the concept of your system, you've got the framework, and now money isn't something that you get phased by. It's now the best opportunity for you to rinse out these prop firms. I say this day in and day out, and not many traders like to hear this, but if you're not a good trader, prop firms are not for you. But if you genuinely are a good trader, you are disciplined, you understand the framework, you have a system that works, you are 100% entitled to use prop firms and to actually get a good deal out of it. Now, there's so many prop firms out there, but my personal favorite is Alpha Capital Group. They've got Alpha Futures and Alpha Capital Group. If you use my code Moby Trades, you actually get a cheeky sneaky little discount, which actually gives you a better ROI when you do get a payout from the market. So that's something that you can use to get more money out of these prop firms. But the aim of the game is to actually rinse as much as you can from prop firms and then go towards your live account and invest as much as you can in your live account so you can actually see progress without relying on other people paying you out. The fifth rule, and I stand on this rule no matter how many times people try to tell me that they should be trading a certain way, always trade with one pair. Master one pair and be good at it. I've been trading gold for the past 6 years. If you see my old videos, you'll see I've always traded gold. Yes, I have experimented with other pairs because I want to know which pair is good for me. But as soon as you find that pair that works for you, this could be S&P 500, NQ, this could be GU, this could be GJ, it could be anything. But whatever it is, make sure you stick to it and master it. Because if you start hopping from one pair to another, it's like going from one sport to another. You're not going to be good at it. You might be athletic, but you're not going to be good at that sport. And it's the exact same thing with these markets. These markets, every pair has different conditions. Every pair moves differently. And so if you are trading different pairs every single day, all you're doing is you're confusing yourself, you're making things harder for yourself. Instead, just focus on just trying to master one pair. Be good at one pair so that it's not stressful, number one, but number two is that you 100% know what the hell is going on in that pair. And so you will understand exactly where it's going to be heading towards. A lot of traders, they try to reset by having a new pair. It works here and there sometimes, but in reality, what you want to do is master that pair. You are going to have highs, you are going to have lows on that pair. But what you're not going to do is have 10 pairs on the side of your watch bar and you're going to try and master all of those pairs at once. That's going to confuse you. It's going to give you analysis paralysis and it's going to make you feel so confused on what the hell is going on in the market that you are trading in. See, look, when you have multiple pairs, you are not waiting for an opportunity. You are looking for an opportunity. There's a big difference. Instead, what you want to do is wait for opportunities to come to you. In the markets, it's all about patience and discipline. It's not about forcing and it's not about looking for things. So if you have multiple pairs in front of you, you are looking for opportunities, which is going to jeopardize the money in your account and you end up losing more money than you actually expected. And lastly, this is something I actually found out recently. I used to be a trader and just sit down in my computer and do nothing else. I was known for trading. I would always have conversations about the markets and I was really, really obsessed with the markets. But what this did was it made me step out of reality. When I used to speak to my friends, they would not want to speak to me because all I'm talking about is business, money, and discipline and the markets. But what I've actually started to do recently, and especially heavily this year, is actually look into external hobbies. Things that can make me a better person, someone that people can enjoy being around. Now, I know this isn't going to make you a better trader. However, there is proof that it actually does make you a better trader because I've been doing this for the past couple months now, and I have noticed myself have a lot more discipline and actually become a way better trader in general. And I'm not saying it's going to make you more profits, but what it will do is it will make you understand that not every day is a day where you make money and not every day is something that's going to be positive. And so when I have an external hobby, those days where I'm not actually making money, I don't feel like I haven't done anything. I actually feel even better because I've actually done something productive. This could be going to the gym. This could go and start a new hobby like paddle. It could be swimming. It could be, going out with your friends on hiking. It could be going for long drives. It could be literally anything. Me and my partner, we've been starting to, go out and try out new foods. We've been hitting the gym. And so doing those external hobbies, those external habits that we're doing and we're implementing it actually makes us more disciplined when it comes to something like trading. You see, trading can become very boring, very long-winded, and can actually, when you do too much of it, you can actually lose a lot of money. But when you have that balance in life, i.e. having an external hobby, that will make you a way better trader, a way more disciplined trader, and you actually see positive effects happening when you're doing those things. Yes, you should have an obsession for the markets. Yes, you should be 100% putting time into the markets. However, not every day is going to be a day where you put in 6 hours in this market. We are trading for freedom. We are not trading to just make money and stare at the markets all day, which is a misconception. What we want to have is freedom and we want to be able to do whatever we want. If it means you want to travel, you should be able to travel. But what you don't want to do is become this nerd in the market that stares and doesn't know anything else. Expand your horizons. Go out there, have conversations with random people, go to the gym, go and try out a new hobby, put your body to the limits. Don't be lazy. Don't be sitting down just staring at the markets. You end up gaining weight. You end up not feeling great. Last year was one of my best years, but I didn't feel great. Why did I not feel great? Because I didn't feel like I was the best version of myself. And that's why I personally have started to pick up external positive hobbies, positive things that will make me a better person, which is actually reflected nicely with my trades. So those are my 6 rules of trading that I've learned in the past 6 years. If any of those rules helps you with your trading, make sure you comment down below and let me know. Also, I have just opened up a few more spaces to my 3-day masterclass. We did this last year around June and we changed hundreds of traders' traders' lives. This is a free thing that's going to happen for you for the next 3 days. It's completely for free. All you have to do is click the link in the description, sign up and book a call with me so me and you can actually have a one-on-one conversation about your trading, and I can tell you exactly how you can become a better trader. In this 3-day masterclass, you'll get 2 coaching calls and you'll also get an onboarding call where I will be able to speak to you and see how we can better you as a trader. Not only that, you get my entire framework, their blueprint that I actually use to trade, and you also get my entire framework of my psychology. If this is something that you're interested in, or if this is something that you actually been needing or you've been looking for, click the link in the description below and book that call ASAP. Like I said, last year we did this and we changed hundreds of traders' lives. This year we're making it even better. So please book a call ASAP because it will get fully booked very fast. But other than that, if you enjoyed this video, you like it, make sure you like this video, subscribe, turn that bell notification on, and I'll see you in the next video.